Time for tonight's Market Monitor. He has some picks. He says will rise double digits over the next 12 months. Joining us is Craig Hodges, CEO of the Hodges Capital Management. Nice to see you again, Chris. Welcome back.
Thank you. Great being on, Sue.
And you are looking at what you say is a more business-friendly tax and regulatory environment, which is going to spur these businesses and their ability to expand, correct?
Yeah, it's a much better atmosphere than we've seen previous, and I've seen more optimism out of management teams, not just for the tax cuts, but the decrease in regulation, and you can tell that they feel like the next couple of years are going to be a pretty good climate. And then you add on this tariff situation, which there's a lot of negotiations, and it causes a lot of volatility. But that's going to be a good thing, too, for U.S. companies. So I think we're in a good spot.
Excellent. And I called you Chris. I know you're Craig. I've known you for years. So my apologies on that.
No problem at all.
Let's get to your first pick, if we could, and that is a commercial metals company, CMC. Why do you like it? Yeah,
it's a small company, but believe it or not, this small rebar company is going to be the #1 U.S. producer of rebar in the United States. It just made an acquisition, Gerdau, the Brazilian company, their U.S. rebar operations. And all of a sudden, here's commercial metals that's going to have 50% of the world, or the U.S. rebar market. And rebar goes in from roads and bridges. Almost all construction has rebar in it. So that's really going to be a big beneficiary of infrastructure and that sort of thing. And here's a company that's trading around 21, 22 that probably in the next couple of years will earn $3 a share. So that's a very inexpensive, kind of uncovered stock that we think there's some pretty big upside in.
All right. Next on the list is International Paper, a name that a lot of people know.
Yeah, and International Paper has really taken it on the chin the last few months. They're in somewhat negotiations to buy Smurfit, the European corrugated paper company, and it's knocked about 25% of the value out of International Paper. Meanwhile, International Paper's had 2 of the best quarters they've had in a long time. They've had nothing but better results. So I think the stock down 15 points from where it was, say 8 weeks ago. It's got some real upside, and you get 3.6% dividend while you wait. So I really like International Paper here as well.
You also like the airlines. You think they're under-owned, and your pick in that particular arena is American Airlines. Why American?
Yes. American has really come down, surprisingly come down. This stock was 59, I think, in the first part of January, and here it is. I think the stock's kind of in the 42 range now, trading about 8 times earnings. They have slightly taken down their earnings, about 50 cents for next year because of some higher fuel costs. But they're still going to earn probably close to $6 this year, and I think $7 next. So I think there's some pretty good upside. Plus, Buffett's been buying all the airlines. I think there's a Buffett bid in there, and I just believe that the airlines at this level have some very good upside with very limited downside.
Craig, thank you so much. Have a great weekend. Craig Hodges with Hodges Capital Management.